Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, July the 25th, the year 2018. Let's talk trading, keeping score. Why would we want to talk about keeping score? I mean, don't our trading platforms keep score for us? I mean, hey, we know if we're making money or losing money. So why would we want to keep score? What else is there to keep score of? I mean, we can look at some of those, fancy statistical analysis of our trades, of our performance, but do they really keep score about you, the trader? For example, does it say how many times you forgot to put a stop loss in? And does it say whether or not you actually stuck to your trading plan? No, it doesn't. You see, those are the kind of scores that you really need to keep. Some of you may know that I'm involved with the union, and I'm running for various positions and ran for various positions in the union. And I was getting some flack yesterday out on a Facebook group because they're saying, you're so negative. You keep talking about the problems. What are you going to do? What's your plan? What are your solutions? And I had to point out to them, I go, look, number one, you have to get certain numbers to find out what the real problem is. For example, one of our I guess maybe you could call them vendors. When you call them up, the phone message says it could take up to a week to get a response. And that's just, to me, that's just unacceptable. Our union in total is a $33 million plus organization, and our sublocal generates over $5 million a year in dues. And when we're talking that kind of money, I think we can get better customer service. I think we should have a phone call back in 24 hours, period. But, if I don't know the numbers, for example, how many people do they have manning the phone per hour? Each hour of the day. And these sophisticated phone systems, they give you all these breakdowns. When's the peak volume? So then we have to ask, do we have enough staff? Are they properly trained? And things like that. So you really have to, you have to keep score of those things so you know what's going on. And that's how it ties in with trading. Every time you put a trade on, you need to, have a little score sheet on the side, kind of like in baseball or basketball, where it's like, okay, when you put this trade on, did you follow your trading plan? Did you put the stop loss in right away? And then you can see whether or not you're up to par. You can see areas that you need to improve. But if you don't keep score, you are just guessing. And you see a lot of businesses don't keep score. And in this case, the union, I don't think, keeps score. They keep doing the same things over and over, and I don't even know if they're really expecting different results. I think they like it just the way it is. But I know a few of us members don't. But anyway, as far as trading goes, you really have to keep score, and figure out what score sheet works for you. I mean, I could give you one, but, some things, and maybe I will, maybe I'll make a PDF and put it out there. You just really need to take a hard look at and not fool yourself. Because just because you have a winning trade doesn't mean you did it properly. I mean, just because you might even be having a winning week or month. You might just be on a little streak there. Just based on law of averages, there's going to be some streaks. And you're going to have hot streaks, cold streaks, and that's just going to put you right back to the average. So they're really not anomalies. They're just part of the overall picture. So, reading Nate Silver's book and reading, Talib's books, you can see these things. So anyway, let's take a look at what's going on here. Money and risk management. Once again, that has to be going on. Oh, we got the yen at the 111 mark again, so it's pulling back. It's dipped down below that 110.93 a couple times and shot right back up. You'll see that in a moment. And for the week, we still have still going down there, as you can see. And it looks like we've got a couple more fills. We've only got 3 that haven't filled. So anybody still trading those weekly gap fills, it's starting to pay off. And on the daily, you see we broke out. We had an inside bar yesterday. In other words, for those just tuning in, the previous day's high was lower than that previous day's high, and the previous day's low was higher than that previous day's low. And you see right there we broke out, and there was about a 14 pips to be had, the difference between this one and this one. And looking at the range, we've only got 3 over 100. The yen's putting in an anemic 56. I'm thinking I might need to switch back to the euro yen because we've got 78 there. And the buy zone once again proved to be a winner. Now, if you took this buy zone trade, you may have, if you stop out at the open, but you see it hit the VWAP and turn right back around. But the VWAP then is probably wasn't the same because VWAP is normally a squiggly line, but I like to have it as a straight line, knowing what the current VWAP is, knowing what to aim for. Okay, so you see here, there was a possible, it went above that weekly open. That was good for about what, 9 pips there if you bust it out at the weekly open. And right here you can see that should have been a scratch trade. It didn't even break this high. You saw it struggling there. And when it was coming back, you should have just scratched out. Right here, there was a short, good for a couple of pips or a scratch, or if you were trying to ride it, you may have taken a loss, stopped out at the daily open. That's usually, I like to stop out. If I'm long, then I don't want to stop out till I'm short. So right here, if I was long and I didn't scratch that trade, I would have been stopped. Right here, short, you can see here, came back to the short zone, came back down. Possible trade for the pros. The new traders, that was green. You don't go short on a green H1 candle. Just wait for another opportunity. Rat zone trade, you can see here, once again, it dipped below the, what was it, the weekly open? No, monthly. I'm sorry, dipped below that previous month's high at 110.93. So that's down here, 110.93. Anyway, it's down here. And so you see it came back up. That would have been a nice rat zone entry. In other words, breaking out of the previous month's high in the rat zone. Got a couple of those. What is it? Trade enhancers. Is that what Sam Seiden calls it? Trade enhancers. It's funny how these guys make these names up. Okay, let's see. I believe we covered the pivot once again. Daily S1 and a bounce. And there's the monthly open right there. Yes, we did cover the pivots. It looks like I need to refresh the screen there. Oh, in case you're thinking, there's the weekly pivot you see. And you can see here how many weekly pivots have been missed this year. Only 3. We've got some way back. I mean, 1 in 26. So you can see we had all 2017, not one missed weekly pivot. No naked pivots rather, because I think I should say a missed pivot is the same week. A naked pivot would be after that week, and then if it gets covered, then it's no longer naked. So as you can see right here, we do have a missed pivot. It's got to take out one or the other. Going to cover those pivots. Doesn't like those naked pivots hanging out there. And somebody said they sent an email saying they really liked the this price action. They thought it was simple. So you had a 2-ball over here. And you can see red at the line, and a 2-ball. And you had a 2-ball down here, so then green at the line. And it's saying, see, you don't buy. Why? Because it's a red H1 candle. That's why it's saying don't buy. Sometimes people wonder, well, what's that all about? And this is the idiot mode that I had put in, oh God, years ago. It's been so long, when there was this one guy who just didn't understand it. So I decided to try and make it really simple. So it's like, if you're an idiot, you just can't understand it. Here, it's real simple. You see this skull? That's like the poison sign on a bottle of, what is it, iodine or something? You just don't trade when you see that sitting up there. And see, now we turn green, so it's saying you don't short. And the 5 lines from the previous daily session. Once again, as I said earlier, same thing, different day. More of the same. Green at a line, you go long. Red at a line, you go short. I mean, one of the simple things is you remember from days going by, we talked about buzzer reversals. Well, and then we've talked about turn trades, and we talked about continuation. Well, one of the things that I've been doing is kind of exploiting these turn trades. So you see here, you got a turn. So on the next candle, you just take the, you just go long. So you can see here, red, green, next candle at the open, you just take your chance, go long. So right here, you'd be green, red, next candle. This is at a bottom though. So it's like, no, I'm not going to go short there. So you see, you put in a bottom. So here's another bottom, red, green, you just take the chance, you go long. So right here, you see this is at a bottom. So red, green, you take the chance, you go long. So at a top, see, you put in a top. So it's green, red, you go short. At a, so it's put in a top. So green, red, you go short. Green, red, you go short. Continuation trade. And you're not looking for big pips. You're just looking to, pocket full of pips. But it gives you something, gives you a directional bias saying, okay, put in a bottom, red, green, we go long. And you can see it's happening right there. So no Harry hindsight. Let's see, I need a new name. Let's call it, we got Harry hindsight. Let's call it Randy real time. How's that sound? Randy real time trade. Okay, here we go. Wick zone. Price doesn't like staying in the wick zone. You know that, right? And the holo setup. And why don't I see any holos? There we go. Guess we had to refresh something. There we go. There's the holo. So you can see, whoops, we don't want to save. Having a little trouble with the mouse today. Anyway, there's the holo setup. What was that number? Remember the previous month's high? So I'm not going to go through the rest. I'm going to let you guys get back to trading. So remember, it's not what you trade, it's how you trade it. So get out there and drain the banks.